All right, let's get started. Can everybody hear me all right? Cool. Thanks, Will. All right, so we'll start as per usual. Welcome to Trading Coaches Playbook. Got the old disclaimer. Of course, this is all about education, so nothing should ever be seen as advice or recommendation. No broker dealers, investment advisors here. Since it is about education, any trades we talk about should always be considered as non-funded. Also, trading involves risk, so we want to keep that in mind and try and minimize that as much as we can. And of course, Freedom Management Partners personnel are not subject to trading restrictions. So, what's on the calendar? Oh, get my drink. Oh, it's empty. Uh-oh. I got another one. We've got Inner Circle on Mondays. Ooh, what happened to that? The July got knocked off of that. But every Monday, except for holidays, we get together with Inner Circle and do a check-in. And then for Mastermind Group, we've got a meeting every Tuesday, and the next one's the first. We've got the next Trading You coming up on July 7th at 8, and another one on July 21st. And then week after next, we've got Mastering the Trade, which is Q&A for Pop with Rob at 8. And then the Monday after that, on July 16th, we've got Q&A with Brandon for his Wealth with Spreads. Of course, we've got our free stuff, Power Hour on Mondays, this Trading Coaches Playbook on Fridays, and of course, what I like to call the greatest hits, Pop, E-Mini Think Tank, and Cover Call Explorer. So, also, we've got our follow us page here where you can find all of the social media platforms that have all the cool free stuff. So, definitely go check that stuff out and utilize it as much as you can. Let's see. And I believe this is over, but I know it's still on the website. Let me do a little look see. But this was Tony's class, Trading Signals. That was a really nice one. But if you missed it, if you go to the website and go to, is it Trading Resources? I think. Let's see. Come on. And of course, here's Trading Like a Boss, where another place where you can find all the cool free stuff. Where is it? Where is it? Well, I thought it was over here. Um, oh, what WBHQ TV. There you go. Click on that, and that'll tell you. That'll send you to the latest one. And there's a replay of Tony's class in case you missed it. All right. So, hey Helen. Hey Brenda. Hey Kevin. All right, so let's get started. So we'll kind of start the same way I've been doing this. I'm kind of following Rob's lead. This is similar to the way that he does Power Hour. We'll do a quick review of kind of the market as a whole and some other things before we dive into our topic for the day, and then we'll maybe find some candidates, talk about some trades. So look at the SPX. So, of course, this is the bigger picture. As we zoom in, lo and behold, what have we here? Dun, da, da, da. So these lines are my all-time high and all-time high close. And we bumped on it yesterday and jumped above it and took off today. Making a run for 6,200 maybe. Hey, Jennifer. Um, so we'll see if it can get there or not. As of this update, which I did probably about 15 minutes ago, we're at 6183. So yeah, going for it. So we had this little box of neutrality. We jumped out at the beginning of the week and just ran. So maybe we'll get us a nice little bump up and get some bullish trades in, right? So that looks really good. And then, of course, take a look at the VIX. which unfortunately is down in that lower third. For me, for Covered Call Explorer folks, uh, we like it to be up here. And when it gets up here, it gets a little too crazy, but I like it in the green zone. It's good for sellers and good for buyers. So that way you've got kind of best of both worlds. Down here, if you're doing long calls and long puts, debit spreads, those type strategies, then you're good. If you're a buyer, then you're good. It gets a little tougher to sell when you're down here to be a seller. So, like I said, I like it better when it's kind of up in the lower to middle range in the middle here in the green, but it doesn't always stay there, right? We trade what the market gives us, and this is what it has given us for now. Stay tuned. It will change. That's one thing. One guarantee I can give you is it will all change in one way or another. You don't get too many guarantees. So anyway, if anybody has any questions, feel free to drop those into the chat box. Um, but that's pretty much it. I mean, we're on a run now. We're still kind of in the doldrums of summer, so you expect more of those boxes of neutrality as we go along than you would in, say, the fall or the beginning of the year when you see a lot more momentum and trends, so to speak. So anyway, let's see, what are we going to talk about today? I thought we would do episode number 2 of my globalization series. And this is some of the stuff that we like to talk about in Inner Circle and Mastermind. We like to take maybe some bigger topics and take a much higher view of it and then go down, down, down and focus in on what's happening, why it's happening, what can we do about it, how can we trade it. So, uh, like I said, we'll talk about the next set of topics for globalization. I call them the graphies. So we've got geography, geography, which I think we all had in what, seventh grade, eighth grade, depending on how old you are, where you went to school. But it's just about a science that deals with description, distribution, and interaction of the diverse physical, biological, and cultural features of the Earth's surface. Well, that's a mouthful, right? But yeah, just. The Earth. And then the other graphy is demography. So, demography, the study of the characteristics of human populations, such as size, growth, density, distribution, and vital statistics. So I get a lot of this from the guy I follow, Peter Zion. Also, I'm seeing, especially demography, I'm seeing this topic come up with other people, like Money and Macro. I hear Heresy Financial talk about it sometimes. Other people. So it's starting to kind of get more in the topic topics that you hear a lot of, as opposed to just one person. There you go, Jennifer. It's good to know what's happening in real estate for your demography. So let's go into it. So, like I said, we got geography and demography, and we're going to start with a little bit of of both. So, geography, we've got its importance, but it's statistic. It's pretty much that's one thing in real estate. What is there one thing that we'll never make any more of? Land. So it's pretty static. It's definitely a necessity. You got to have it to live on, to maybe grow crops on. Um, the metaphor that I like to use is a biscuit. And yes, I'm from the South, as if you could not tell. And I will go into that a little bit deeper, but basically what I'm talking about is a good biscuit is crunchy on the outside and soft on the inside. Another part of geography, yeah, right, Will. So another part of geography is how it affects the inputs and outputs that a country, a region has and can do. Like if you don't have the inputs to accomplish something, then you're not going to accomplish it. Now, globalization has changed a lot of that, and we'll go into that in a little bit too. Got to risk it to get the biscuit. All right. And with demography, okay, people are necessary. Yeah. Uh, One of the big topics that you hear Zion talk about a lot is 20 somethings or 20-year-olds. And he likes to ask, how long does it take to make a 20-year-old? Yes, that's a loaded question. About 20 years, right? So if you're not having babies 20 years down the road, you're not going to have any 20-year-olds. And that's when people start to work, right? So it's more difficult to have a good workforce if you don't keep a healthy demography. And we'll go through within the demographic ranges where the consumers fit, where the producers fit, how it affects credit and investment and social programs. So there's our overview. We'll start with geography, and this one's going to be a little quicker. I'm going to spend more time on demography because it's a little bit more important to the trading side. But with geography, agriculture and resources. Have you got arable land? Do you have energy or the ability to generate energy? Do you have minerals? We're seeing that a lot lately, especially with rare earth elements. And how much per capita? Like with Saudi Arabia, they don't have a lot of people, but they got a whole lot of oil. So do you have what you need to support your own population, and do you have enough to export it out and make money on it? But you got to have agriculture because you got to have food because you got to feed those people, right? And who knows where the most productive, largest, most productive piece of arable land is in the world? The United States. There's a lot of other nice pieces of land in France and Turkey and Argentina, but really, it's about the U.S. when it comes to agriculture in a lot of different sectors. Arable land, Brenda, is something you can grow crops on. So, like desert, not arable, because yeah, although I've seen some things where they are managing to bring some greenery back to some very large desert areas, but yeah, it needs you need to have good soil, you need to have water source. Yeah. So, you think of the Midwest portion of the United States where all those crops are grown, or Florida, or California, or for that, Michigan, lots of different places. But as a whole, we kind of put everybody else to shame a little bit. But so here, and then you've got to have security. This is the crunchy crust of your biscuit. So, do you have mountains, desert, dense forests and jungles, deserts, oceans, rivers? So, you want your security around the outside. Like we have two big moats, the Pacific and the Atlantic. And then we've got friendly neighbors with Canada and Mexico. So we're kind of surrounded, very secure. So the United States has great security. Other places, not so much. It's a lot of what's happening with Russia. They don't have secure borders, it's just wide open spaces. So they are fearful of that. Not that I agree with their uh, uh, method of resolution, but and then you've got transportation, which is more about that soft center. Can you move around inside that crusty crust? So can you keep everybody out that you want to keep out and still move around inside? Again, the United States does very well with this. Got a lot of navigable rivers, a lot of railroads, big roads, big ports, so you can bring things in that aren't already here or ship things out that you're trying to sell to others. And then you've got neighbors, as I mentioned before, Canada and Mexico. Are your neighbors friendly? Are they helpful? Are they needy? So those are some questions you have to ask about evaluating your neighbors. Um, Look at what's going on in the Middle East. A lot of unfriendly neighbors to everybody almost. So yeah, it's a very important part, and we're very lucky here in North America. So let's move on to demography. And this is what you'll see a lot with demography. It's called a pyramid chart. And it's basically these are the ages, and this is the number of people in that age group. This would be considered a very healthy demography. Most of them are split right down the middle with men on this side and women on this side. And what you'll see, I've got these kind of crossed off in four different areas. You've got kids, which is basically below 20, 18, whatever. Then you've got consumers as you start to work and make money and grow families, you consume a lot. And then that's about 20 to 40 ish. These are all ish. As you start to get into your 40s and 50s, the kids start to move out. You become more of what we call a producer, which is you are not consuming goods, you're putting money into the system. And then as you get to 65, you become a senior. You're no longer a producer. You may or may not be taking money out of the system again. You may be doing both, actually. There are people that do nothing but take money out of the system. There are others, very wealthy people, that are maybe taking their Social Security because they put in and they deserve it, but they're also putting other things in. But probably as you get older, your risk profile begins to narrow and you are doing more bonds and T-bills and annuities and CDs instead of MicroStrategy and Coinbase and GameStop, some of the crazier ones that we've seen. So anyway, that just kind of gives you an idea of what you see when you're looking at a population pyramid. And here are some examples of your different generations of how you lay out inside that pyramid. So from 1920, and again, these are ish, from 1928 to 1945 is the silent generation. And then, of course, from 1946 to 1964 is the baby boomers, which is the largest generation in human history worldwide. And that's because everybody started having babies after World War II. So then you've got the best, Generation X, guess which one I'm in, which is 1965 to 1980. It's not quite as big, but we're kind of becoming the producers as the baby boomers are moving into retirement. I believe at the beginning of this year, statistically, the baby boomers were about two-thirds retired. Now, of course, retired is a loaded word, and when you actually retire is kind of what do you want to do. Some people retire at 62, some people retire at 40, some people retire at 80, so it depends on where you land there. But as most of these baby boomers are at least in that cadre that are moving into retirement, you see their money move, and it's affecting the markets. It's affecting capitalization, and we'll get into that in a little bit. So then of course, you've got the millennials, 81 to 96. You got the Zoomers, XYZ, 97 to 12. And then you've got Generation Alpha, which is 13 to 25. And now we are in the midst of creating Generation Beta, which are the ones being born right now. So that kind of gives you an idea when you hear these terms of what we're talking about, what people are talking about. Then you've got something to think about with industrialization and how does this affect demography? So as countries industrialize, they urbanize. They move from rural areas to urban areas. Um, and the timetable for this can affect how it affects your demography. Like with England and the United States, we took generations to do this. For China, they did it in about 35 years. So that's why you're seeing such a huge effect on China's demography right now because they did it really, really fast. And what happens is when you're on a farm, you have as many kids as you can, plus one. That's how you know you had too many because it's free labor. They help you work the farm. When people move into urban areas, children become more of an expense, less of a resource. And that's a very dry way to put it because they're people. But in this context, that's what we're talking about. And so people have less of them, and therefore your birth rates start to go down. Who knows what the uh, uh, birth rate to sustain a population is per woman? There you go. I knew Trader Will jumps in because he's heard this a hundred. He's heard this presentation 100 times. It's 2.1. So basically, you're looking for a mother and a father to replace themselves. So that's two. And then the plus one is for things, unforeseen circumstances that happen, especially in less developed countries. So then we've got population. So you've got your birth rates, like I was just talking about. You've got your bomb. You're seeing a lot of population bombs right now. Um, Immigration can help mitigate that, especially from a labor standpoint. But what we're seeing a lot, I think it was Money and Macro coined the phrase J- Japanification. And basically, we've seen this happen in Japan since like the 90s. Their population has just collapsed, but they've managed to keep it going. They're still relatively productive country. But they are one of the oldest. China is quickly passing them. We'll go into this in a little bit more detail in a little bit, but you'll see where as they get older and you have more older people than you have, when you have more seniors than consumers, you start to get in trouble. When you have more seniors than kids, then the problem follows you into the future, you know. So you got to have the kids to build the pyramid, right? So, and then you've got capitalization, and this is where it all comes to. You've got your kids are dependents, your consumers are the spenders, your producers are the investors, and then the seniors can become, at least to some degree, dependents again. So when you see the producers become seniors, they begin to take their money out of the market and it becomes harder and harder to capitalize new businesses. So this is where this becomes very important, not only from a labor perspective, but also from a capitalization perspective in the developed countries. More about labor in developing countries, more about capitalization in developed countries. And so it's something you have to pay attention to because as it becomes harder to capitalize business, becomes more expensive, and you see things like what you're seeing right now, where money is hard to understand. And it's because the economics of our world are changing, and this is a major part of it. And as they change, the economists don't have models for this stuff anymore. So they can't make legitimate predictions as to what's going to happen until they're able to build models. And with all of the changes, whether they're geopolitical or whether they are demographic or whether they are money, it makes it all very difficult. And that's where you start to see some of this volatility, some of this crazy volatility in the markets. So this is where we start to burn down into this. Why is this important to us, right? So here's a few examples of pyramids. So you've got your rapid growth. These are the most healthy. A lot of this is in Africa, Kenya, Nigeria. You see a little bit of it. I'll show you a map in a minute. Then you've got the slower growth, United States, Australia, Canada, where we've our outside our bottom is starting to shrink in, but it's not quite the chimney, which is zero growth, which you see a lot in Europe. And then you start to get into negative growth. And the biggest ones you see there are Japan, South Korea, China, Germany, Italy, and you're seeing it now in Eastern Europe with Bulgaria, Hungary, Ukraine, Russia. So you're seeing a lot of this stuff happen, and what it can cause, what can come from it. So here we go. So we've got India, very good demography. Who knows what any of these flags are? And Will, you're not allowed to answer because you already know the answer. This is Uruguay. This is Paraguay. This is Nigeria, and this is Kenya. These are countries that have pretty good demographics, and that's because they are in the developing phase. They haven't fully industrialized and urbanized, so they're at some point in the progression as opposed to being at the end. Whereas when you get into some of these countries, Japan, Germany, South Korea, China, they're further along and they're starting to collapse. And I put us in here because we're not in negative and we're really not quite in zero. We're kind of more in slow growth. Part of that is because our birth rates are below two. About, I think it's like 1.8, 1.7, but we have a lot of immigration. And regardless of the politics of all that, this country was kind of built on immigration. So it is an important part as long as it's done correctly. And what we're seeing now is we want to see more people come into our country that can fill the gaps where our demography is starting to fail us, wherever that is. And Japan, uh, um, culturally, they don't do immigration. China, nobody wants to immigrate there. Germany has some immigration. They've had some difficulties with it, but they do some immigration, and it's helping a little bit, but not a lot. So all of that. Let's take a look at some countries and what we think of them. So in Europe, let's look at Germany and France. Everybody always thought, and this some of this is a little dated. It was pre-COVID. Um, yeah, that's true, Brenda. And so Germany was always the powerhouse, the industrial powerhouse. Everybody thought that Germany would always rule Europe because they have for so long. And yet, their rivers are not real good. That they've got forests and mountains that can make the infrastructure tough. Their demography is bad. They've got resource problems, especially now with everything that's going on with Russia. So yeah, that they were very good, but they're starting to collapse off really, really fast. France, on the other hand, did not buy into the globalization as much as everybody else. They've got lots of good. They've got an ocean on one side. They've got rivers and mountains for borders, so they got a little bit of crust. They've got some very arable, fertile land that they can use for agriculture, like grapes for wine, right? They've got good internal infrastructure. They use a lot of nuclear energy, and that's one of the things we're seeing a lot more of, and I want to see a whole lot more of it. Everybody thinks nuclear is so dangerous because of the China Syndrome movie, and then 3 Mile Island happening right after that, and everybody's all freaked out. Well, for those of you that don't know, Microsoft is reopening 3 Mile Island to run their one of their data centers or some one of their centers, and the technology of it is very different. But that's a different subject. We'll go into that at another time. Um, but yeah, they never really bought in completely to the global order, so they were separated from it a little bit. And also, their demographics are relatively good, and they're also open to immigration, whereas other countries are not. When you look at Asia, of course, the big players, you got China and Japan. China, wide open spaces, no crunchy crust at all. It's actually their best borders hem them in, and that's why you see Hong Kong and Shanghai and the places along the coast doing so much better because they then have mountains behind them and they kind of get cut off from the rest of China. Uh, um, they put everything into exporting and they industrialized way too fast, and now it's starting to catch up with them. They are the fastest aging population in human history right now. Their military is very large and growing. Some people question its abilities, so that gives it a little bit more of a crust, but it doesn't. Its natural crust is not helping. And then you've got Japan, very mountainous island, no resources to speak of, um, and but they are a big ally of the United States. They do have a very capable navy. So that helps them, especially as an island nation. And that was the fastest growing country, aging country in Japan. But if you look at that part of the world, you're probably going to see better demographics in an India or Southeast Asia. But even Southeast Asia is starting to drift into the urbanization from industrialization realm. And then you got South America, and everybody thinks Brazil's the big bad boy of South America, but they have a lot of jungles. They have a very similar problem to China. They've got that coast along the Atlantic, and then they've got mountains right behind it. So it makes transportation very difficult. They do have a lot of resources. They do have very good agriculture, but it requires a lot of input. Their soil, if you take the trees off of a jungle, the soil underneath is not very fertile. It's very fertile for the jungle until you take the jungle away, and it's not good for growing crops. It takes a lot of inputs. Um, and they do have a very large population, and they've done well up to this point, but they're starting to falter a little bit. The country that's really doing well, if they can stay out of their own way, is Argentina. They have some very great land, very arable, fertile land. They've got very secure uh, um, geography. They are very similar to the United States. And they do a lot of agriculture and a lot of exporting of their agriculture, and their demography is relatively healthy. The problem is right here: coups, mismanagement, craziness. For whatever reason, Argentina can't stay out of its own way. So we'll see if that continues. And then we've got the Middle East. So lots going on there now. Some of this information is a little bit dated, about 3 years. But, everybody thinks Saudi Arabia is the big bad boy in the Middle East because they've got so much oil and natural gas and money that comes from that. Now, the United States has been their security guarantor, but that's beginning to waver. Um, they do have lots of equipment and weapons, but they don't have a lot of people that know how to use them. Kind of like with all of their labor, they don't do it. They import their labor. Like I said, their demography is pretty good, but it's beginning to falter. And then, of course, you've got this, which you see a lot from several countries in the Middle East, where they like to export their problems. But speaking of which, Iran, they do have a very crusty country. Um, they don't have a lot of arable land, but they do have pretty good borders to keep those they want out. Plenty of oil, lots of minerals. They've got a large population, but their birth rates are starting to falter a little bit. And they've got a very large military, but it's used mostly for internal control. And then you've got Turkey, the one that people don't always think about, but they have probably some of the best geography, the mountainous peninsula, controlling sea trade in the Black Sea and land trade from Europe across Europe and Southeast Asia. So, before ships, before deep water shipping, um, Turkey was the bomb because they controlled all the transportation. But they've got probably the best agriculture in that area. Partially, it's not as desert. They have a very stable, relatively young population, and they have the most capable army in Europe and the Middle East, believe it or not, because they're kind of both. They got that little piece in Europe, and they are in NATO. So, but yeah, so again, they're another one though. They need to be careful not to get in their own way, especially from a geopolitical standpoint. But in general, they've got a pretty good setup. And then you got the United States of America. So since that's where I am, and that's where a lot of the people in here, if not all the people in here are, we're gonna spend just a little bit extra time on the United States specifically. And as far as agriculture, resources, security, transportation, neighbors, all the different categories. So, with agriculture, larger arable land of any other country. We also have plenty of oil and natural gas, coal, and nuclear. The nuclear right now is old, but hopefully that's going to change. but we've got lots of resources and lots of capabilities for agriculture and energy. So that's awesome. Security, forest and tundra to the north, desert and mountains to the south, the Atlantic Ocean on the east, and the Pacific Ocean on the west. Sounds pretty good to me. On top of that, we'll get to the neighbors in a minute. Even though we've got borders on the north and south, we've also got friends on the north and south. So, transportation, very soft in the middle from this perspective, lots of navigable rivers, the Mississippi being the most obvious, but you've also got the Ohio, the Missouri, lots and lots. Um, oh, what's the one up there that goes the one that goes from the Great Lakes over to the Atlantic. Um, and then we've got lots of railroads and very big interstates with lots and lots of trucks on them, right? But we've also got big ports: LA, Savannah, Georgia, New York, Seattle, San Francisco, Miami, Boston, etc. I didn't even put Virginia in there. So we've got lots of capabilities to bring things in and ship things out. For our neighbors, we've got Canada to the north, basically like siblings. And yes, that comes with the good and the bad. We've got Mexico, which is our largest trading partner to our south. And then we've got, of course, USMCA, which is a revision of NAFTA, which is currently in more revisions. So we'll see how that all turns out. But in the grand scheme of things, I think you'll see these partnerships continue long term. You may see hiccups short term. And then our demography, our population is aging very much like the Europeans and the East Asians, with one exception. Our boomers had babies, and they're called the millennials for the most part. Um, a lot of other countries, the boomers didn't have babies. So that's part of their demographic collapse. And we have lots of immigration to fill in the gaps. And we won't go down that road because that's a tricky trail, but it is very beneficial. Um, so why are demographics important? Can you tell? Does this picture, are all these pictures kind of telling you where we're headed? And this is a slight continuation of what Rob talked about in Power Hour. So, and this is where Japan has managed to keep itself above water, even though its demography is starting to falter, is using robots. And of course, we've all seen the industrial robots. They've been around for a while, but now we're starting to see things like assistant robots and almost humanoid robots. And I love this one. This guy's got a backpack on that gives him 4 extra arms to do whatever. And I've seen they're not in a large scale use, but they're past prototyping, getting into use, are the big skeletons. I forget the word for it. You see them in the movies all the time, where you basically step into this big mechanism that looks like a human body, but it's much bigger, and it allows you to either do multiple things or to lift very, very heavy tonnage, or things like that. So you're seeing more and more of that, and that's where we get into the robotics, which is what I think will be one of our bigger saviors in our demographic decline. Um, although, all right, who knows? Who knows? Who knows who this is? Um, so we've got the Jetsons here. What happened to? There it is. That's their maid, and of course we'll see robots being used more and more for things like that. Rosie the maid, that's right. But what did the Jetsons promise us all that we're still waiting on? Ye old flying car, but we're beginning to see a little bit more, with the automated robo taxis, and I think we ought to call them Johnny Cabs, like from the movie Total Recall. And that way there'll be a robot driver in the front, so it won't look like you're nobody's driving the vehicle. But anyway, yeah. So this is, oh, hello. Tesla stock popped 8% on Monday when Musk touted the successful robo-taxi Austin launch. So we're seeing more of this, and we're seeing other countries start to get into this, especially China. And I think we will begin to see more and more of this. I'm slightly dubious of it right now, simply because I don't think it will completely work until all cars are that way. Although if anybody's bought a new car, I got a car last year, and I mean, I can take my hand off the wheel and it'll drive. I'll put it on cruise control and put the sensor to keep me away from the car in front of me, and then it's got sensors to keep me in the lane. And okay, now it's not a self-driving car, but it has enough mechanisms to where I can kind of take my hand off the wheel, but I'm not going to stop paying attention. We're not there yet. But yeah, like there are cars out there that have self-driving mechanisms. They're just not perfected yet. And they're not widespread enough, because those computers cannot they cannot predict what us crazy humans will do. So, there's a little bit of that going on. So, all right. So, what can all of this do for us? Well, here's some ideas. So when you talk about robotics, it's a very broad, yeah, there you go. What happens when the computer crashes? You better have a manual override, right? Of course, these days, a regular car is the same way. I mean, the car just stopped because it's only got like 75 chips in it, probably more like 175. But anyway, you've got NVIDIA, semiconductors, AI, robotics hardware. You've got Intuitive Surgicals. Anybody ever heard of this? I've traded it more in the past than in recent, but they do a lot of surgical robotics. And of course, how many surgeries are done robotically now? A lot of them. You got Tesla with your robot stuff, automation. There you go. Jennifer owns ISRG. UiPath, which is a new one that I've seen pop up on covered call on our lists for can't remember if it was a covered call or a diagonal, but they are in the software side of robotic process automation. You got Rockwell, Zebra, Teradyne, Boston Scientific. This is another medical robots. You got iRobot. With your Roomba. And for those of you unaware, Husqvarna, I can never say that big long lawnmower name. They have a robot lawnmower. So, and it works like a Roomba. It can map out your yard and then just go mow it. And we got Symbotic. That one comes up a lot in Covered Call Explorer too. We're looking at warehouse automation. um, Autodesk, which is design software for things like robotics. And then you've got your Amazons. Anybody ever seen a picture of inside of an Amazon warehouse? It's almost nothing but robots now. You look at where they make cars, like the picture I showed a little while ago. It's mostly robots. The people are actually controlling the robots as opposed to building the cars. And that's where you get into your robotics and your artificial intelligence. Anybody follow a guy named Dan Martell? He's influencer on YouTube. Puts out a lot of good stuff on AI. I heard him say something the other day that made a lot of sense to me. He said, "You will not lose your job to AI. You will lose your job to a person who knows how to use AI to do it better." So that should be you, right? Same thing with robotics. You may not lose your job to a robot, but you might lose your job to someone who can operate that robot. Or probably more accurately, 4 or 5 people will be replaced by a robot and one person. And again, when you get into the robots and the AI, they don't eat, they don't sleep, they don't rest, they don't stop. So from a business perspective, that's very profitable. So hopefully everybody got some good stuff out of this. Yes, I Robot is a movie, and it's another one of those Beware the Robots movies, like Terminator. But if you want more information on any of this stuff, whether it's economics or globalization or what have you, here are some of the people that I follow a lot. Of course, you heard me mention Peter Zion a lot. Heresy Financial is really good. China Update, Market Update, that's the same guy doing two different channels. Gives you a lot of good information if you want to learn about what's happening in China, especially economically. And also, his Market Update is his new channel where he does more of global, not just China. He does Asia, North America, Europe kind of stuff. And then you got Money and Macro, who is this guy is an economist. He does a lot of good stuff. He's the one that came up with Japanification. You got Ryan McBeth. He is a retired military guy who is a software engineer, does a lot of stuff with AI and software and military. Great perspective on a lot of different things. And then Andrew Bustamante is a retired CIA field agent, and you can find him on YouTube or his website. So there's other stuff out there. These are kind of the one of the some of the big ones that I follow a lot, and I've gotten a, almost all of this information from, or they've sent me on a trail that brought me to that information. So, as with all of my classes, we will finish with well, I call them fun slides. Don't quit. You know, more appropriate words were never said, especially in trading. When things go wrong, as they sometimes will, when the road you're trudging seems all uphill, when the funds are low and the debts are high, and you want to smile, but you have to sigh, when care is pressing you down a bit, rest if you must, but don't you quit. Success is failure turned inside out, silver line of the clouds of doubt. And you can never tell how close you are. It may be near when it seems afar. So stick to the fight when you're hardest hit. It's when things go wrong that you mustn't quit. So there you go. Just keep going. In the immortal words of Winston Churchill, if you find yourself in hell, keep going. So that is it for my presentation for the slideshow portion of today's entertainment. So what do you want to look at? We've got lots of good stuff here. So we've got see, we got the S&P kind of going a little sideways right now. Look at the Qs taking a little rest after their big move up. That's through lunch. Wow. Interesting. Just throw any candidates you want to look at in the chat. Oh, I'm sorry, that's the Dow. Look at me. I'm not even paying attention. So we got the S&P and the Dow moving up. We got the Nasdaq trying to figure out what it wants to do when it grows up, and the rut's kind of doing the steppy step. All right, so Jennifer has. Let's bring this one over for right now. We'll do it from here first. Let's look at this and CRWV. Core weave. This is the newer one. Let's see. Let's blow it up so we can see the whole thing. So, I think this might have been something that Rob brought up. I've seen it, but as you can see, I mean, we don't even have a 21 day moving average on this thing yet. Which we should. I'm not sure why we don't, but anyway. All right. See you later, Will. Thanks. Um, you know, it's kind of had a big run and a little pause, and then it kind of did very much like the SPX. Looks like it's faltering off a little bit, but we are sitting right at that 8. So that's nice. Nice place to look. Let's do. this is going to be almost, oops, I missed it. It's going to be almost violated, but that is 12. Well, we've got 15. Let's go up to the next one. And that's almost 15. So that's almost average true range. I actually like this one better anyway. It's a little big, but that's because we don't have a lot of time. So it's difficult to do these. But look at that. Looks like a pretty good setup to me. Looks like a nice switchback. You can get up above, bounce and go, or you can just bounce and fail. And you're right there at the 8, got a really nice confluence. Um, so yeah, plenty of room down, plenty of room up. Very nice. I like this one. Nice choice, Jennifer. All right, Jennifer also said Merville. Let's see. Let's blow this up a little bit so we can see. And yeah, this is one we do in the lab a good bit. Will brought this one to the lab. Let's see. Do I not have? I thought I had a fib on here somewhere. I don't. Wow. Okay. Um, so we're kind of in the cup in the U. We had this big move down, which is exactly what the SPX did. Marvel did not follow the SPX per se. Let's here pop it on there. See, the SPX took off a little bit harder, whereas Marvel was a little bit more sedate. Um, but it is moving up. We have got all of our moving averages in the correct order, so that makes it true bullish. We had earnings there, so we'll probably have earnings well past our. This is our 21-day mark right here. So that's nice. Let's zoom in a little bit. Actually, before we do that, let's do that. Ooh, that's nice. What is that? That's about 5. Ooh, that's kind of big, but it's not too big. I'm gonna keep it. That's about right. Um, I like it. I like this gap. We're in the middle of filling this gap, so that might give us a little push to the upside. We've got confluence with our Fibonacci and our 8 moving average. Unfortunately, the price is not down there with it, so that makes it a little bit tougher. This one might be a wait and see, depending on what you want to do. Oh yeah, always look for those gaps. Those are huge because the market does not like gaps for the most part. And it varies from stock to stock. This is where we talk about doing a dossier or a checklist to if you want to trade, if you trade something a lot, you start to learn a lot about it. Like I trade AMD, Micron, Roku, IBM, Nvidia a lot. Spies, Qs, IWM, diamonds, a lot. So I know kind of how they move, and I have a feel for them. I know their heartbeat, as Rob likes to say. So you always want to do that, and you begin to understand how that equity, how that instrument reacts to gaps. But most of them are going to want to they want to close that window, fill that gap. So yeah, could be something going on here. A lot of stepping going on here, up and down and up and down. So makes it a little bit tougher to do swing trades like that. Got a little box of neutrality right there, like the SPX. So that one might be a wait and see. All right. So Brenda wants to take a look at GLD, the bright shiny one. So yeah, I mean, gold of course took off at the beginning of the year, and it got way up here. What is that? 318. So that's probably about where the spot price for gold started to top out, and it got really gappy in here too. But what we're seeing actually, and I don't have, let's see. I'm going to do this one. It's a little steep, but it's a good move. Between our zero point 0.5 and 0.618, we've got, what is that, 6. So that's 4. So that's about right. That's a pretty good one. That's a pretty good one. So let's zoom in on it a little bit and see what we're looking at. So price wise, we reached down and hit that 318 and bounced, right? Now our moving averages are getting a little wonky. They were in the right order, and then we got a little crossover here and a little crossover here. So you want to be careful of stuff like that. Could affect the price movement. Big gap down today. Not sure why. For those of you unaware of the news, this would be a nice little segue over to Forex Factory. Please note, core PCE price index went up from zero point 0.1 month over month to zero point 0.2 month over month. So that's not good for the economy, but it's not a huge hit. Personal income and spending, which is still yellow, but it went down. And then the University of Michigan revised consumer sentiment went up just a little bit, and the inflation expectation went down just a little bit. So those are kind of neutral. But that PCE is what the Fed uses as their inflation marker, much more so than CPI. So we might see more lack of rate cuts in the future because of that. But that's just month over month, and it might be a blip. Who knows? But anyway, that could be some of what's behind this. Yeah, green is just up, not necessarily good, Jennifer. And so yeah, so gold is it's in a nice place on the fib, but it's already bounced. The problem, and I don't use the 55 for anything other than bias, really. Some people trade with it. I don't that much. Longer term stuff maybe, but not that much. So you've got your averages, you've got both averages and your other Fibonacci level up here. Huge confluence. You can get up here and bounce off that and fail. That'd be a nice one, but yep, could be, but blah, 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 could very well be Jennifer. She said, I wonder if GLD is reacting to lower dollar value. Um, it could be, but more than likely, if the dollar starts to falter, gold should respond well. And it's up. It gapped down, but it's up for the day. That's what my candles are a little bit different. So a green open is normal, a red closed is normal, but when it's the color is what is it doing today? I'm sorry, the color, the open and closed is what is it doing today? The color is how does it relate to yesterday? So like you see an open red candle, that's because we've got, this is our open and this is our close. So we're up for the day, but our close is lower than yesterday's close. So that's why it's red. It's 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 one of those things you have to get used to. I learned that from Ryan Litchfield, and I like it. It's you hear us talk about you as a trader. So that's me as a trader. All right, we got one more. What was that? Oh, CVX. Let's take a look at that. That one came up. Oh, that's Chevron. I was thinking CVS. CVX. Oh, wow. Che, take a look at that. I think we can draw a nice little Fibonacci right there. Bang. Make sure it's not too big. It's way too big. Oh, wow. Or is it? Hold on. So we've got 50. So that's 4. Oh, it's not too big. It's close. It's almost too big. So you don't want the difference between the 0.5 and the 0.618 to be bigger than your Fibit. And your Fibit is twice your Wilder's average true range, which right here, your average true range, you probably can't see that, is 2.88. So that gives us a Fibit of about 5.5, 5.6. And this difference is about $4.35. So it's close, but it's still okay. So we pull this over and look at that. We're in the middle of nowhere. We're in between the moving averages, was I don't like that squeeze. um, personally, but being in the middle, this is kind of a wait and see, right? We're kind of sideways right here. We had that big drop off and then we went sideways. So, and a lot of this, I think we're seeing some of the oil prices and the oil companies are becoming a little bit less able to predict things with them. Not necessarily volatile. Some are volatile, some are not, but the predictability is becoming very difficult because of everything that's going on in the Middle East. And not necessarily that our oil comes from there, but oil is a global commodity. So its price is affected by wherever it happens. So always want to be careful of that when you see craziness and unpredictability of happenings in that region. So anyway, all right. Well, we're 101, so that'll be it for today. Hope everybody got some good nuggets, and we will see you at our next happening. I'll be here well, I don't know. Oh, don't forget, next Friday is the 4th of July. The market is closed. Wealth Builders is closed. Also, I just found out that July 3rd on Thursday, the market closes at 1. So be aware of that. All of next week's options expire on Thursday. So be aware of all of that. So there you go. Wish I'd said that earlier. Some people dropped out, but there you go. So trade disciplined out there, and we'll see you next time.